Okay, welcome back, traders. John Caruso here for July 7th, RJO Futures, doing a quick look in on the market here. We've got risk on here today. I believe this is a risk on day within a larger risk off trend that we've seen here. Obviously, we've seen some pretty steep corrections in a lot of these commodity markets over the past 3 to 4 weeks. We've seen some corrections as deep as 31, 32%. And the broader swath of the markets have all, for the most part, corrected 20%. So have we priced in a recession? That's the biggest question right now. I do believe over the last 3 or 4 weeks and seeing this commodity slide that we are pricing in a recession. But of course, we know the longer term supply side fundamentals remain very bullish. So you've got to be able to hold those two opposing thoughts in your head. Number one, that we've got cycle risk and the possibility of a recession and demand destruction. And then number two, when you look at the supply side, longer term supply side fundamentals, particularly in the energy markets, very, very bullish from a longer term perspective. So we're kind of trying to balance those two thoughts right now. We do have risk on, like I mentioned. We do have crude oil back above 103. We've got rallies going on in the metals markets, copper, platinum, silver, and gold. We also have some bounces happening inside of the agriculture markets. Now, when I look at this tape, because the correction has been so steep, I do believe that this is setting up your next best opportunity to become bearish on the commodity markets, whether or not it's for a trade or a continuation of the downtrend. I am willing to entertain that some of these markets have seen or are close to seeing their intermediate to longer term lows. But right now, the forces are still in favor of the bear camp. And this rally that we've seen here today could be your next best opportunity to look at positioning bearishly going forward. Stock market risk on. We do have the NASDAQ above 12,000. Again, that's up roughly 150 points. The S&P 500 up 34 points, trying to knock on the door at 3,900. I am, of course, open to the idea that we could see some higher prices here over the near term. I do think if the NASDAQ were to get up around 12,400 to 12,800, 12,400 to 12,800, I do think that is going to be a very strong resistance area, and the market's likely going to struggle to get through. We did hear from the Fed minutes yesterday. They are largely in supportive of another 75 basis point interest rate hike in the July meeting. And then, of course, going into August, we have the Jackson Hole meeting, where I happen to believe, and it might be a little too early to tell, that the Fed might be looking at pausing on their interest rate hike cycle and just kind of taking a moment, taking a look around, and assessing the damage from there. So that's something that we're looking forward to over the next 30 to 45 days. That's all I have for you here today. John Caruso, once again, best of luck to you out there. We'll catch you back here tomorrow.